All right, folks. A quick AV check here. Y'all should see my screen, hear my voice, and see my screen. We good? Okay. All right. So let's get going. So thanks for being here, folks. I am super excited. This evening, we're going to be going over my playbook for easy, high probability entries and the 5 no-brainer signals. For those of you who don't know me, my name is Joe Roca. Today is March 10th, 2021. So without further ado, let's get rolling. All right, here's a recent win in the NASDAQ. This is the NQ future. Okay, so this evening we're going to be discussing primarily futures. Okay, this is a reversal signal where we sold the top of the range up here. And let me get my cursor out for you. We sold the top of the range up here and we scaled out as the market broke here and here. This was an overnight trade, so this was a set it and forget it, right? And this has got a great 1 to 5 risk reward ratio, meaning you risk $1 for every $5. And a profit on this was about 3.3 thousand bucks with a risk of $600. So the objective tonight is to discuss simplicity, right? And to give you the option to get in and out of the market with easy, clear signal. Okay, so what are you going to discover tonight? Proven strategies for unprecedented market conditions. As you know, the market is bananas. We keep making all-time highs, but we also keep having these massive pullbacks. Okay, so how do you take advantage of that? Well, we've got some easy to follow entry signals to catch the big moves, and we're trying to avoid the emotional mistakes, right? The trading plan I'm going to be sending and talking about fits different time frames, okay? And it can be applied to almost any account size, most notably as small as 500 bucks, okay? And again, something we're going to stress tonight and something I'm going to talk about a lot is proper risk reward ratio. How many bucks we are risking versus how many bucks we want to reward ourselves with, if of course the trade goes in our direction. So why do we need this strategy today? Why do you need it in these market conditions? And everyone knows the saying, don't mess with the bull market, right? And you can see here with this trading example, it was $4.1 thousand, okay, within 2 hours. Okay, so we did 4 grand in 2 hours, risking 2,000 to make 4,000. Okay, now what I want to point out in this particular trade example is we're not always trying to catch that falling knife, right? We don't have to buy the bottom. And in this particular example, we buy as the market turns and starts heading up. And you can see in the lower left-hand corner, this is the P&L and that nice, easy, smooth ride up, okay? We want to make sure you guys are aware of all of these opportunities and not just focused on, buying some stocks and hoping the market goes up, okay? We want to show you how to work within these daily and weekly ranges. Here's another example where we're just really reading the market like a book. And the signals I'm showing you are very simplistic, right? And they're very mechanistic. We can identify these shorter term intraday moves, right? And we can trade against the trend. So even though it's an overall bullish trend on an intraday basis, right, we do have those little pullbacks. And sometimes those pullbacks are big and sometimes they are fast. This particular, trade was 5.5 grand, a nice 1 to 4 risk reward ratio. Here's a little quote. Joe continues to make profit from thin air. While that is a very sweet sentiment, the objective is that this isn't from thin air, right? This is mechanistic. This is if this, then that. If that, then this. And it's really just a step-by-step checklist, okay? And what's nice about this is the risk reward is huge, is really, really huge. Okay. So if you find that you're struggling to maintain consistent profits, right? And you're getting drained, and you're just getting burned both mentally and monetarily, right? Or if you're glued to the freaking computer all day, or your time is being poorly spent, you're chasing the market after it rallies, or you're buying at the top and then you get faked out by one of those damn computer generated signals. It's tough, right? And if you have a small account and you're looking to learn futures, this is going to help you, right? If you have a large account and you want to add some tools to that tool belt, this will help you. And then we're going to show you how to size up for that kind of exponential growth. But really, the reduction of that mental drainage and theta that's just burning gets very, very tiring. So we're going to try and cut that off. All right. So why futures? Obviously, like I mentioned, I do stocks, I do options as well. And I like those, and they definitely have a great place, right? But what's nice about futures is it's very easy to follow, right? It's very leveraged in a positive way, okay? And the liquidity is endless. So getting filled at a specific price is not that challenging. Getting filled within a specific zone is not hard because there's so much volume out there, right? And there's a low hurdle to entry as well, and that generally is your account size. Now you can scale up and trade a bigger account, and we'll get to that later, but the hurdle to entry is very low. And my favorite thing is easy to select and manage markets, okay? And I'll come back to that as we move forward here. So how are you going to succeed? So trading does not need to be this massively complex algorithm, etc., right? We're going to teach you how to break down these signals into a simpler fashion, simpler trading. And we want you to reinvest in yourself and enjoy the markets and join, the new traders who are spending just a little bit of time trading, right, while they're working from home in these, unprecedented times, if you will. So again, using the checklist that I'm going to provide you folks, we're going to focus on a select few futures products, only 5 or 6 specific products. We're going to tell you where to enter the trade, when to enter the trade, and how to exit. So what's nice about this is we don't have to monitor a big, long list of stocks, okay? Now, again, I'm in both, but I'm focusing on futures because that's where the leverage is, right? That's where you can really grow those accounts, okay? So by creating a trading plan that fits different time frames, okay, you have the freedom and flexibility to trade on your time. And again, coming back to this risk reward ratio, we use this in conjunction with the probability of entering one of these trades, okay, these signals, and you can scale up or scale down. So that's how I've grown my account. And we're going to get into some actual numbers here. So the P&L you see right here, okay, this is based off of a $10,000 account. Now, many people trade with me live here at Simpler Trading, and I send out these alerts, okay? And these alerts that I'm sending out in December were $15,000, okay? January, 21,000, and February, 25,000. Okay, so an overall $62,000, and that's again based off of a 10K account, and that's the kind of the amount of margin one would want to get started with if you were going to look to mimic these trades and mimic these particular results. Now, again, the returns are proof, right? The returns are proof. So far in March here, we're up 12K, and our max up day is about 4.9K. Average down, daily average is 1.7, and our max down day is negative 2.4. Okay, and you can see these P&Ls over here on the right. Now, there are specific days when the market is just crazy and just bananas. So this last Friday morning, when I was in the sending out these alerts. I said, listen, folks, the market's going to be crazy. There's no conservative trades, so take a step back, right? So that's another thing that we help identify are those market conditions on when we should be looking at, days like this first day of the month, or when we should be looking at this Friday and say, all right, step on back. Step on back. This is going to be absolutely crazy. Strategies are going to be tough to fill. Okay. So before I keep going, I'm going to introduce myself. Again, Joe Roca. I went to the University of Illinois, Urbana-Champaign. Go Illini. My major was industrial and enterprise systems engineering. Okay, so I was an engineer in college with a focus on business systems integration and consulting. And then, of course, you can see my professional experience. Went straight to the NYMEX out of college, was on the trading floor there. I've been on the proprietary side and the commercial and physical side, and then now here in the education business and the retail side. Hobbies, I played soccer in college. I do a ton of yoga, and then there's meditation over here on the right. That's a little bit more sporadic than the first two, but I like to put that out there more as a goal than as a consistent everyday reality. But let's kind of let me give you a little bit more information as to why I'm sharing my secrets today. So with the right knowledge, change is possible. And I'm sure many of you have heard me say this many times, but it is seriously the truth. My dad was my coach there in soccer for 15 years, from the time I could walk to the time I went off to college. Obviously, he did not coach me in college, but I learned from him and ultimately really enjoyed trading or coaching. Okay. And it was a real passion of mine. Obviously, I can't coach soccer 100% of the time during the day because I have a day job, but this is like the perfect mesh for me. And I've helped novice traders who are new to the game and experienced traders as well. We want to give you folks results, and we want to give you the independence, okay? And thus, providing guidance as a trader here, okay? So what I want to do is pass on the details, the experiences, and thus provide you with actionable strategies based off of a checklist, okay? So I started my career in Manhattan. I was a trader on the NYMEX, or the New York Mercantile Exchange, and I started out in the crude oil pit. And I'm sure all of you have seen this in the movies, and you've seen traders in the pits and this, that, and the other. And I can tell you from personal experience, the movies are accurate. It is that crazy. It is that challenging. And it's a heck of a lot of fun, to be quite honest. And there's a million things going on around you, right? There's thousands of people, hundreds of people. And if you miss something, you're in trouble. If there's a huge block trade that trades over there on the other side of the pit and you don't see that, right, you're going to be screwed. If you don't know what Merrill Lynch is doing next to you, then you're done, okay? So being able to look at a plethora of variables and scenarios and situations all at once is what makes a trader, okay? And that 15 years of experience is what I bring here to the retail side. And I've been on the commercial and the proprietary sectors, okay? And again, I focused on commodities when I started, so crude oil, natural gas, etc. And now getting into indices and equities. And tonight we're going to be focusing on futures, but like I said, I'm also big into options and OTC derivatives. Now, something I want to point out here at the bottom is that I was a market maker, meaning, we would look to take trades in both directions all day long, okay? So now we're not going to be doing that today, but that is a piece of knowledge about myself and my experience that I'm going to try and impart on to you. Now, so that the background, that I'm bringing, I would say, definitely gives me a serious edge over many retail traders. And that's because of my understanding of market flow, volume. Okay, now I was also the architect of algo and HFT strategies. I'm not going to bore you with the details there. I know a lot of you have heard that before, but that's why I understand how computers have taken over, right? And how you don't get sucked into some of those false signals. And really, you know, again, we're not going to get into the details there right now, but you know, we want to show you how to look past those signals, right, and defeat the computers, i.e., we do not want them to take all of your money. Okay. All right, so what's different about the strategy tonight is we're focusing on my favorite setups for trading in this market. It's a dynamic strategy. It works on multiple time frames. For example, you can open a trade up when you get home from work in the evening, walk away from your computer, and then kind of let it ride into the morning, okay? Or you can put that trade on the evening and leave your targets, profits overnight, and some trades will last a few days, okay? But the objective is to identify time frames that work for you, okay? And we've got 3 specific time frames that we'll discuss, but here's another trade example from the NASDAQ, okay? $6,500. This was overnight, okay? We risked 1,500 for it, and the signals are this basic. So if you look in the lower left-hand corner, we're buying 3 NQs or NASDAQ here, and then selling here, here, and here. So this is just a nice kind of overnight trade. All of our targets were predetermined, right? We bought nearly after market open, put in our targets, set the stop losses, and walked away. So this is a good example of having those predetermined exits, right? So we don't have to be sitting at the computer and glued. It's kind of a filler kill, right? And again, nice to wake up to $6.5 grand in your bank account. So, or your trading account, as the case may be. So we want to have a signal that's kind of quote for all seasons, right? And the market presents opportunities to capture those big swing moves that can last days or weeks. I want you to have a signal that will last for all of that. And that's kind of the objective here is if I'm not there to guide you through it, I want you to have the independence based off of what we learned here together. Now, this is another set it and forget it trade. It was a fire sale signal, lasted about 5 days. The risk reward on this was abnormally large. It was 1 to 10. Very challenging to find trades like that where you can only risk $1 to make $10, right? Risk 1 to make 10. And we did this in CL. The level that we caught here at the bottom was directly based off of the high volume areas that you see over here on the right-hand side of the screen. And this helps us identify these support and resistance areas, okay? So now there are also times when the market moves very fast, very swiftly, all right? And you can catch some good moves in a pretty short period of time and get some fast intraday profits. So these fast, efficient, and quick trades can help you fund the risk for those longer term plays that I just showed you. So here's an example of a trade that took less than a half an hour. We sold the S&P 500 as it was breaking based off of kind of these particular setups. You can see in the lower left-hand corner, again, the simplicity of the signals. Sell here, cover here, here, and here. Now, you'll notice that this is starting to sound somewhat, again, mechanistic, right? But that's kind of the objective is if this, then that. If that, then this, right? So I'm kind of looking at this from an engineering perspective, right? You know, when I was in college, I had no idea I was going to be here today teaching you folks how to trade. But I learned how to apply kind of that engineering background to this style of trading. So as an engineer, you know, I would take a process that was 45 minutes and 30 steps, right? And then take that process and reduce it to 35 minutes and 25 steps, right? So we're kind of pulling out the minutia and trying to make and to really simplify and to really streamline. Okay, so that's why having kind of that professional experience in conjunction with the engineering mindset really helps in trading. All right, so what do you need to get started? So to mimic the strategy, you can have an account as small as 10K. Now the percentage is what really shapes the day. And let's say you're a little newer to trading and you kind of just want to give this a go. You can start an account with as small as 500 bucks. Recently, the exchange introduced a product called the Micro, okay, and that fits perfectly for those small $500 accounts, okay. And then from there, as that micro account begins to build and you get some confidence and some results, that's when you go ahead and size up for potential exponential growth. All right, again, here's another NASDAQ symbol or NASDAQ trade. So the reason I wanted to show you this particular example is that we're not just buying and hoping or buying and holding, right? In this particular day, the market just crashed, rallied back up towards this VWAP. It's a volume weighted average. And then we saw some crosses here in our EMAs, and we started scaling out on the way down. Okay, so again, this example, we're not just buying and hoping the market keeps going up and continues to make all-time highs. We're doing stuff throughout the day to kind of get in and take advantage of those simplistic moves, right? And so that's risk a buck to make $3 on this particular trade. So, you know, some of our trades are only going to last 5 minutes and some will last weeks, right? Now, lately, this has been somewhat interesting is that, you know, last year, for instance, if we had a trade that took 2 to 3 weeks to pan out, now it takes 2 to 3 days because the ranges are so wide, right? The market conditions are just optimal for this particular strategy. If we had a trade that took 2 to 3 days, now it takes 2 to 3 hours. If it took 2 to 3 hours, now it takes 20 to 30 minutes, right? So that's how these big risk reward ratios of returns are achieved day over day over day. Okay, so there is a specific amount or a specific window of time here, 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 and here, right, that you can trade. So if you can only make it a few hours a day or a few hours a week here and there, there's no problem, right? The market's always going to be around. You do not need to be at the computer all day. You want to trade when your schedule is free, right? If the kids are fighting or you're out of gas, your car stops, there's no need to run over to the computer because I can tell you there will be another signal tomorrow and there will be another signal the day after that, right? So the setups are just endless, almost, right? So our job is to use this checklist for these trades and identify, okay, this looks good, boom, let's take it and go from there. Here's another overnight trade, right? And you'll also notice that it's to the downside, okay? What we're doing is looking to kind of catch that drop overnight. So going into the next day, we've got some risk capital in the kitty, right? And we can use that to get long into the following trading day. Okay, so we know exactly where we're going to cover before we enter the trade. We know exactly where we get stopped out if the market moves against. So the trade signals are black and white. They're very easy to follow. It works for all levels of traders. I generally stick with multiples of 3, so I'll use a 1 lot, a 2 lot, or a 3 lot. Now, if you want to scale up, of course, you can go 3, 6, 9. You can go 30, 90, or 30, 60, 90, right? The choice is yours, but it's all predetermined, okay? So we know if it moves against us, we're not just going to wait and have a decision to make. No, it's a mechanistic. The lever will be pulled for us automatically. Okay, all right. Here is a rebound signal, okay? And what we're doing here is taking the market that's coming off of fair value and looking for the market to exhaust itself to the downside. And this is more of a conservative trade with a 1 to 2 risk reward ratio. But this type of signal is for moderate, consistent gains, day over day, trade over trade, day over day, trade over trade. Okay. So what account size do you need? Again, I do want to emphasize that this does work with small accounts. So for those of you with 500 bucks, now for those of you with 10, 30, 100,000, that's where things really open up for you, right? So it works for all levels because again, we can now use micros, okay? So before we take a closer look at the strategies, let's quickly look at some of the technicals and indicators that are going to be used to identify these trades. So this is a basic VWAP chart that I use, okay? And I'm sure your trading platform or many of them already have a lot of these technical indicators, right? But it's all about how to pair them together. Okay, how to use the EMA with the VWAP and the CCI and the ranges, okay? We're condensing all of that into one simplistic view, okay? So you're not required to analyze this, that, and the other, okay? You're looking at this. So if this, then that, right? So if you could kind of reverse engineer profits, that's our objective here, to reverse engineer profits. And we're like, what if you could just pull on a lever and make the market move? Well, you can't make it move, but you can pull on that lever and watch those gears turn and have a prediction of where the market's going to go. Okay, $5,500. This is in 27 minutes. Precision tactics, right? That's the objective, precision and simplicity. Over here on the right is called an HVA, or high volume area. In this kind of market profile, it's a graphical representation that combines price and time information, okay? And that's going to produce support and resistance levels. And that's how we get, again, these precision, simplistic tactics, okay? We know where we're getting in, we know where we're getting out. And that's one of the reasons that futures are so optimal for day trading, right? We just have an unlimited amount of, well, let me rephrase. We have an unlimited amount of positions, right? And anytime you can go long or short, but we can cut out all that nonsense and really hone in on these particular levels. This was $7,500. You'll notice this trade was with 6, and typically my max position is 3. But every once in a while, we'll see a trade where we say, okay, let's double down our size. We won't expand our risk magnitude, but we think this is going to go. So let's go ahead and double down. Okay, so we'll do that occasionally, not often, but occasionally. And that's, again, another way to realize some profits on these 3 time frames. The first one is 3 hours. Okay, so an intraday trade. The second time frame is 23 hours. So that would be if you opened it in the evening, it would be closed by the 4 p.m. close before the margin call at the end of the day. And then the third time frames are the ones that last for a few days or a few weeks. Now, like I said, due to the ranges that we've had that have been much wider than usual, we don't really have to warehouse risk for 4 weeks. We simply don't. Yeah, our targets upside or downside are generally hit within a couple of days. And if they're not, we can always kind of roll that position over. And the objective here, and what I want to show you, is that with these 3 time frames, you can do what's best for you. Okay, here's a 7-hour trade. Okay, we put this on in the morning. It kind of goes back to that don't mess with the bull market. This was risking $800 and we did $4,200. Okay, so This example, what I wanted to show you that's different from some of the others is as the market rallied in our favor, we started scaling out. But we scaled back in as the market pulled back. Okay, that way, in the event the market really took off, which it did, we can have a larger position to take advantage of those larger moves. Okay, and this is kind of the type of signal that we're really looking for, where we can get in, mid-level towards the bottom of the range, scale out on the way up, and then if it pulls back, we just put that position back on and boom, there it goes. Okay, and that's how some of these huge risk reward trades are. And again, risking $1 to make $5. And that's a nice, and again, this is only with, initially this is with the 2 lot. So we only bought 2, then we sold 1, bought 2, sold 1, sold 1. Okay, so we're not buying and selling at the same time. We're buying, then we're selling, it pulls back, we buy one back, and then we sell. Okay. Now this is a longer trade in crude oil. Again, some of my crude oil or some of my longer term trades are going to be leaned a little bit more towards the commodity side because that's my professional background. Again, I was on the NYMEX, right? And coming from that institutional side with that volume, I have a good fundamental feel for the market, especially as crude's finally kind of coming back into the swing of things. But I was talking about this trade for quite some time, and these levels where we're selling were predetermined. Okay, these were HVA levels that I showed you guys earlier. Okay, it was that chart I showed you earlier, that volume-based support and resistance, and that's kind of how we are attempting to put this stuff on, leave it on, and move on. Okay, so the strategies are working well with these wide market ranges. Okay, these high volume that we're seeing, the big swings, and all of that meshes together very nicely to form a high probability technical setup. Okay, now if you add in what's going on in the marketplace, the stimulus, right? Vaccines, what's going on with the Fed, okay? If we have a nice understanding or even a moderate understanding of that, we can identify the signals that will work best in those particular market conditions, okay? So here's a runaway signal, which is essentially buying a new high or selling a new low. So we have a method to jump on an existing trend, right, that prevents us from chasing the market, okay? And there are specific conditions. If the ranges are super wide on that particular day, we're probably not going to use this signal, okay? So that's something that we really want to keep in mind. And then these buy levels here are right on some HVA levels. And the signal, very simple. This trade took an hour. A rebound signal. Again, the market breaks, comes back up to the VWAP, touches it right on the nose. EMA's cross, and we break. Okay, cover here, $2,500 in 1 hour. And this particular trade, we were only risking $600 to make $2,400. That might Leo's barking in the background. Apologize for that. This is called the middle out signal. Okay, where if the market's trading range bound over the course of the day, and all of a sudden there's an occurrence from a technical standpoint, right? That's driven by fundamentals, and we check 1, 2, 3, 4, 5 boxes. Boom, we're in and we're out. Okay, or we're in and we're off, as the case may be. This was a trade in gold, 1.9 thousand, risking 400 to make 1870. So a nice 1-to-4 risk reward ratio. A little better than that, but we always like to round down in the event of any sort of like slippage or commissions, etc. So fire sale signal. Again, this is a crude trade, an overnight trade, where we look to get long on a dip, okay, and then sell as the market rallied up. So for quite some time, crude oil was trading down in the 50s, and I said it's a lock that we're going to hit that 60 handle, so $60 and something. Then I said, all right, our next target's going to be up at $65. Okay, so we're in a similar trade now, where the market, the CL market, kind of dipped down into the 63 handle, and we're targeting the $70 handle. Okay, so these are kind of the high risk, high reward trades, because you have to hold them a little bit further or a little bit longer generally. Okay, so reversal signal here in the S&P. We were looking to take this trade back to the upside, right? Unfortunately, it did not work out. And what's important to remember is losses are acceptable. Not your hit ratio or your win rate is never going to be 100%, right? So, you know, if you're out with some friends and you're at a party and say, oh gosh, I win all the time. This is what I'm doing and it works 100% of the time. No, there are going to be losses, right? But the point is, if the risk is less than the reward from a monetary standpoint, okay, we'll see that difference in P&L is what's going to work out for you. All right. So strategy overview, what have we discovered so far today? And again, here's that kind of this P&L growth, right, that we've seen here in futures. It's been pretty big growth, right, in just 3 months. Now, these are based off of just kind of simplistic intraday stuff, right? If you were to add on those longer overnight trades, that's when you see kind of this exponential movement in your P&L, right? That exponential jump, those big gaps up. However, even without that, right, we still have this nice smooth uptrend line. And this profit that we're looking at from the alerts, some of the intraday trades, is what we can then do on the overnight stuff. But again, the strategy that we're going to be employing from an intraday basis, an overnight basis, and a long-term basis is all very similar. Okay. So again, what we discovered is how to take calculated risks for consistent and moderate gains, right? So something I've been kind of repeating is simple and consistent, right? A simple strategy, right, with consistent moves. And again, when we're trading and we're by ourselves and we don't want to trade in isolation, right? We want to trade on a team, and that kind of goes back to the coaching aspect that I mentioned earlier. Working with my dad for all those years, being a part of a team is really quite exceptional. And so, for those of you who are working from home nowadays, or who are spending more time at home, who want to spend a few hours here, a few hours there, that's a great way to really spend your time, right? And if you spend it in a community, if you're with me and you're learning these strategies, it's a pretty exciting concept when you drill down to it, right? So again, we talked about how to capture moves in both directions, right? Again, we're not just buying and holding, okay? If there's uncertainty in the market, meaning like, for instance, is the stimulus bill going to pass? Well, of course it is. We know that. Will it be signed into law? Yes, it will on Friday. Okay. However, today there was something about OPEC and crude oil crashed, right? So regardless of these uncertain market conditions, we used these strategies, this checklist, to simplify your life, to reduce that mental discombobulation and crush that just constant kind of self-deprecation, right? So we want to show you the entries that will be used for big wins. And again, this is another small little trade, right? we're selling. Even though we're in this huge uptrending market, right? We're not afraid to go short now and then, okay? Now, we got stopped out of this trade prior to the low of the day, unfortunately, but that happens, right? Not everything is going to be a massive winner. Losses are acceptable. This particular trade was a win, 1,400 bucks, right? And here's that kind of very simplistic execution method. And again, these are all in advance, right? So strategies for your toolbox. Now, you don't need to be an expert at trading to take this course. Absolutely not. You can start with a small account and scale into this larger account as you learn the strategies, okay? And we're going to go and have been going through specific trade examples to help you understand my strategies, those 5 strategies we looked at, right, to seriously improve your trading. All right, so here's what I want from you is to use what you learn. Okay, I want to empower you, right? That's kind of our whole objective here as a coach, is to improve the performance as a team, right? And that's really what I'm here for, is to help you folks, right? To use what you learn, take action to improve your trading. That's what you want. That's what I want from you, right? To actively trade when you are available, because there's always more to learn. And the tools that you need are the tools that I possess, which will be the tools that you will learn, okay? So using these strategies and entries, you'll have a much clearer understanding of the markets, right? And gain consistency with those profits. And again, that's the objective, simple consistency. Now, if you're still with me at this point, right, you're serious about improving your trading. You're serious about a commitment, right, and serious about learning, okay? And that's what we're here to do. Simple learning, account growth. Now, the next question is, will these indicators work on my platform? So if you're using Sierra Chart, we got you covered. If you're using Thinkorswim, we got you covered. If you're using TopStep, we got you covered. So we have pre-made charts with existing indicators that you can download, okay? If you're not using one of these, there's a lot of workarounds that you can use to get these, but we're gonna give you the tools, okay? And we're gonna give you the levers, right, that we use from this engineering standpoint, from the professional background, experience, and move forward, okay? So the strike zone strategy, that's what we've titled this, the strike zone strategy, and it's my simple setups for 3x intraday gains, excuse me. And so there's going to be some live trading involved as well. So we'll go over the kind of options for you here in a moment. Okay, so tonight we're selling 3 packages. We're offering 3 packages, okay? The basic, the pro, and the elite. And I'm going to go through the packages one by one and walk you through what's what. So the basic package at $497. This is the strategy class itself, okay? And this class is a week from Saturday from 12 to 4. I've never done a class that has been less than 5 hours. So if you can set aside 5 hours, that'd be great. Now this class is where we're going to get into the specifics of these strategies, right? We don't want you to get caught by fake moves. If you don't know where to enter the trade, we're going to show you exactly where and when. Also with the basic package here is the indicator install session. So if you're new to futures, or if you're downloading a new chart book, or the indicators are somewhat new to you, we're going to show you the basic and simple way to use those. Okay, we're going to coach you and help you get into the mind frame of a trader. All right. So now the pro package is pretty great. In addition to the strategy class on Saturday, we have 2 days of live trading. Okay, where we're going to be looking at the markets, and we're going to be, again, not, obviously you've probably heard this analogy from us 8 million times, but not only teaching you how to fish, but feeding you supper. But that's the darn truth, right? And you have the opportunity to trade live during market hours, right? And also, if you're looking to take some of these longer term trades, okay, if you look here, we will send out alerts. Okay, and these alerts go right to your phone. They're push alerts, right? So if there's an evening trade, you'll get a notification saying, hey, Joe has a setup from this price. We're going to risk this to make this, this, and this. You put the trade on, and then when we start, and then when we get into the live trading, you might have an overnight trade already on. Okay, so that's the pro package again. So it's the class, and then 2 days live trading. Now the elite package, which is the best value by far, if you're ready to go all in, you have 5 live trading sessions, okay, versus 2 in the pro. 5 live trading sessions. And this gives you the opportunity to really make the most of everything you learned in the class. Okay. And it gives you the opportunity to see the strategy in action, right? And it's so much fun. It's so much fun. And if we have 1 or 2 upside trades, then potentially, right, you cover the cost of the class. If things go really well, of course, there's that exponential opportunity. If things keep going well, we're just going to keep this strategy going and going and going, right? But you have, again, 2 days of the elite live trading, and 2 days of the pro package live trading, a bonus live session, and this is kind of really the sweetener here, is that you get a 30-day trial for the Strike Zone newsletter. Okay, and we just sent one out earlier this morning, and that Strike Zone newsletter contains all of my support and resistance levels that are derived from the HVAs. So, I mean, you can get that immediately, right? So between now and the class, you can start using those HVAs on your own. And again, if you love this newsletter, it's going to renew. If you don't like it, make sure, let us know, and we'll cancel that. But with the elite package, again, you get, a free trial. This generally it's $79, but like I said, with this elite package, you'll get that for free. And again, I got to tell you, if market conditions persist, and there's absolutely no reason that they won't, well, there's a high probability that they will, this kind of the elite package here is really the way to go, and completely up to you. But I want to again stress: simple, concise, consistent. Simple, concise, consistent. That's really the whole methodology. Okay. So what time is it? Where am I on time? It's about 7:52. Okay. So comments, questions, concerns, like I said, or Daryl said when we started, I'm going to take some time to answer some questions now. So let's take a look. Amelia, I'm not sure. Have you taking a note of questions, and you bet she did. Okay. All right, so can we do this with stocks and ETFs? This is primarily for futures, okay? The trading charts, the systems, the setups are built for futures markets. It's not going to be nearly as applicable there for stocks and ETFs. Again, charting platforms and brokerages, those are optional. I listed the ones earlier on in that presentation. Tradeovate versus Infinity Futures, TradeStation, all three of those will work for you. The trading platform that I use or recommend, Sierra Chart is the most powerful charting system out there, and it is the least expensive, most powerful platform on the planet without question. That's what I like to use. You can also, of course, use Thinkorswim, works nicely, and then Tradeovate through TopStep works nicely as well. All right, so I'm looking, okay, taking note of questions, good. So if you want to post these into that sheet, that would be great. Okay, so if you, all right, so here we have, let's see, would love to get the prices that futures only platforms give, but can restrict myself to that. So you don't have to be a member or have a seat on the exchange. You can simply open up an account with a small brokerage. Okay. If you've never traded futures before, do you need anything to trade futures in Canada? Contact the brokerage. The rules in Canada have changed ever since that what happened with Man Financial. Won't get into details on that. But if you are in Canada, take a look at some of the brokerage houses. I don't know which ones work in Canada off the top of my head, but you can't. I know for a fact that you can, that they are in existence. Let's see. Are the entries limit orders? So that's a good question. It depends on the signal. Oftentimes, the market will be moving and we'll say, okay, let's put the trade on here. If the market kind of drifts above or below the order, that's fine. We want to enter at a specific price at a specific limit order, but often if we're trading and the market's moving, especially when things are this fast, we'll just go market price. We're not going to handcuff ourselves to this one and only tick, right? As long as we kind of put the position on in that little zone, that entry zone, we're good. And then all of the exit orders are limits just hanging out in the market. So the objective is get the position on and then exit here, here, and here. Okay, so am I correct in the assumption that these trades can't be made with the same day trade limits? So if the trade is opened at 5 p.m. and closed by 4 p.m. the next day, you can use the intraday limits with the smaller brokerages, with these smaller brokerage houses. Okay, you can use regular intraday margins, and that's based off of the brokerage house. If you use a larger house like Interactive Brokers, the marginal requirement will be a little bit bigger. If you're using a smaller brokerage house like Thinkorswim, you know, it's generally about $1,000 a contract, and that's all day long. Okay. How am I able to predetermine targets? The targets, again, those are all predetermined based off of support and resistance levels, which are driven by volume, which is driven by repetition over time, more or less, right? How many times has the market traded at this price? Has it traded there and reversed, traded there, reversed, or come from the bottom, traded there and reversed, or traded there, stopped and stayed, right? So all of a sudden we have this big volume triangle built out, right? And that's really the best methodology for determining a lot of these really important support and resistance levels. Okay. How are you able to avoid getting picked off on stop runs, right? So short squeezes, right? So with the like I said, I was the chief architect of these HFT and algo strategies. So I know when they're happening. I'm familiar with them. I can see them. And from there, not only can we avoid getting picked off from these, we can actually jump on top of them, right? Double down and take these even further, right? So it's a, the coin, it's a upside coin, right? We can identify when to get out of these trades based off of the volume indicators, right? Because as soon as things get way oversold based off of what we're seeing in the charts, if we're long, we can cut ourselves off and then look to come back in. But if we're short when this is happening, not only are we going to ride that short, we're going to add to that short and we're going to double down. If you look back at that S&P example I showed you earlier, that's the perfect example. That was the squeeze, the thing fell, and boom, we doubled down and got on with a fair amount of size. Okay. All right. You're new to trading futures. What is the minimum account balance we could consider starting out with? Somebody wants some attention. So if you can start out with an account as small as 500 bucks, okay, and you can trade the micros. If you want to look to kind of mimic and use the same 3 lots per trade, okay, the number of futures contracts that I look at is 4 to 6. 4 to 6 futures contracts. The S&P, the Dow, the YM, and the Russell. So the four main equity contracts, and then also commodities. I focus on crude oil and gold. Okay, crude oil and gold. All right. So if you are using a small account, you can use micros, and the margin on micros is as small as about 50 bucks a contract. Okay. So the difference between a micro and a mini is the micro is 1/10 the size. Okay. You're using Sierra Chart Package 3. Will that be okay, or do you need Package 5? You do need Package 5. I think it's 10 extra bucks. Or no, 5. Yeah, you need Package 5. It's either like $28 to, it's $7 to $10 more. But if you have that Package 5, then you get the HVA and the market delta. With just Package 3, I don't believe that's included. Is risk capped, like with trading options? You bet your behind risk is capped. Absolutely. We are not going to put on a futures trade without stop losses. Absolutely not. So before you put that trade on, you know precisely how much you're willing to risk and precisely what your largest downside would be, unless of course there's, massive slippage or something like that. But it's the same concept in options. Yes, your order is going to be filled at near market price. Okay. In the class, we'll be spending more time on explaining volume profiles and relevance of HVA in trading. Yes. Yes. Leo is a Leo is a golden doodle, and he is about the age where he's no longer going to be a lap dog in about a month or two. Okay. Do you have a standard set of bracket orders for each different futures? I noticed that a lot of the orders are for 3 positions. That's a great question. Yeah. So for instance, like with the S&P, you can have a bracket order that puts a stop loss at 7.5 points, and then targets at plus 7 plus 14 plus 21, right? So it just splits them out like that. And then you can adjust them to specific levels from there. So like if you're using, bracket set A for ES, bracket set B for NQ, bracket set C. So yeah, you can program those specific bracket orders depending on the execution software that you're using. Okay, so new to futures, I'd mentioned that there's a max dollar amount when purchasing futures. I mentioned there was a max dollar amount when purchasing futures. So I think the question is, in order to put on a 1 lot in futures, for the smaller brokerages houses like Thinkorswim, you would need $1,000 in cash to put on a mini. Okay, and minis were what I was using in all of those examples that you saw earlier. Now you could also do a micro, in which it would require either $50 or $100. So, but for the sake of discussion, we'll keep it at 50. And then the risk reward ratio on that is exactly the same, right? The only difference is commissions. Okay. So how are the alerts going to work in these fast moving markets? Great question. So when we are live trading, I will call the alerts out over the microphone. As I'm doing that, Amelia will send the alerts out up above in the alert section of the trading room, and they will also go out to your phone. Okay. So if it's in the evening, right, and we're in a live trading session, and I say, all right, let's put this trade on. Generally, if we put on a trade in the evening, the market's not going to fly away from that price. You'll get an alert. It'll go to your phone, walk over your computer, put the trade on, and then when we begin, the live trading sessions during these time frames that you see on the screen here, then we'll kind of go over what the trade was, why we did it, and we will also probably initiate some new trades. Okay, so on the short-term trades, they'll go out verbally and in the alert section. For the kind of overnight trades, they'll go out in the alert section. I'll send them out. There'll be push notification to your phone, and then you're all set. NinjaTrader does not have a volume profile. However, there is a service, a third-party service that you can use through NinjaTrader. I haven't used it myself. Well, I have, but I haven't employed it myself because I have it through other systems. But if you contact your broker at Ninja, you can ask for that volume profile and or that HVA, and they'll be able to help you out. Okay. What is the expected beginner success rate for futures? Well, I can tell you this: it's exponentially higher when you are working with a team and working with a simplistic system. Okay. I don't think I'm not going to give it a numeric value. I don't think that would. I'm not going to give it a numeric value, but I can tell you with certainty that it's much higher if you are working with a team. and especially with this type of simplistic system. Okay. All right. In my setup, am I using order flow charts as well? How can we get them on Thinkorswim? So the chart book that I use in Thinkorswim comes free with the class. So all of these chart books, all of these indicators, all of these setups are free with the class. So if you sign up for the class and you're using TOS, there's a link to a chart book. You download that link, load it up, and there you go. Okay. All right. Is the indicator package different? No, the indicators that we're using are the same, but we're focusing on entries for this. Okay. All right. Are there any restrictions on accounts above 25K? So if you have larger accounts, the benefits are that you can scale out at additional levels, right? It kind of gives you a bit more flexibility on your targets. So if you have targets 1, 2, and 3, right, and they're spaced out, you can put some in the middle as well. But most importantly, and what really makes it nice, is you can have a trailing level that if the market just blasts off, right, you can have that flyer that you're using with house money that the trade's already, profitable, and see, okay, the market's up 50 points and you're up $2,000. Well, maybe the market all of a sudden out of nowhere goes up 100 points, right? Well, you still have an extra lot or two on, and you can try and ride that. Okay. Now, do I teach you how to select targets? Yes, absolutely. Are the restrictions on selling futures and TOS? That the main answer is no. Okay. You can buy and sell any commodity at any time. Now, occasionally, they will put a temporary restriction on if, for instance, there's a war, right, and the market is just off the hook, right, and it's all of a sudden we're trading in $100 a barrel or something insane like that, or if say OPEC, if there's some sort of OPEC disaster, right, they might pause trading for a short period of time, but it's not going to be like what happened with the Reddit, the meme trade. It's not going to be like that. If I'm guessing what your questions. So for HVA, so one of the things we're going to be talking about in the class is our HVA's high volume area. That's been one of the biggest questions I've had, and we actually have a specific section where it's just going to be dedicated to HVAs. Okay, it's just going to be dedicated to HVAs, high value areas, and we're going to talk about how to update those, okay, how to read those, and how to use them as either entry or exit levels. So we're going to spend a good deal of time just on that, which in my opinion is really the biggest benefit of trading with volume and market profiles. Can I teach you how to select targets? You're darn right I can. Absolutely. That's going to be based off of the aforementioned HVA levels. For sure. Super excited. Awesome. I am super excited too. Again, we're getting started a week from Saturday. Class will be about 4 or 5 hours. and then we have 5 days of live trading. We have an indicator session, and then you also have the free newsletter with those HVA pre-existing. You can start using them right away. So I'm pumped. I'm really pumped. I think it's gonna be a heck of a lot of fun. So again, the objective here is simplistic consistency, right? I'm bringing that lean engineering mind frame to this, and just getting out, cutting out that mental noise or that mental drainage, right? And kind of cutting through the bullshit, really. And then with kind of my experience on the trading floor, on the commercial and proprietary side, really is going to help everyone here on the retail side. So we're pumped about that. Market conditions are phenomenal. Our results lately have been great, speak for themselves. Low barrier to entry, right? If you're new, you can get started with the account as small as $500. But certainly, if you're trading with a larger account, then that's really where you're gonna see those results. I'm a beast. Thanks. I appreciate it. Yeah, it's gonna be a lot of fun. Leo's gonna be there, right? Is lovely, energetic Leo, just about as excited as can be. He would not leave me alone up until the webinar, and then all of a sudden he just like went off in a corner and crashed. So perfect timing, bud. Okay. All right. So I am live in the trading room tomorrow, as always. I'm super excited, everybody. I think it's going to be a great value proposition. Let's push all the noise out of the way. Let's make life fun. Let's make life simple. And let's just hit the ground running. So thanks for being here. I had a great time. See you.